Hello, chart watchers and Decision Point faithful. Welcome to this Monday, July 26th, 2021 Decision Point show. My name is Erin Swenlin. I'm the Vice President of DecisionPoint.com. And my father, Carl Swenlin, he's not with us today, but I have plenty to talk to you about. We are going to do our regular SPY and indicator overview. I'm also going to talk about something that's relatively new to Decision Point reports, and that is bias assessment. And, Carl came up with some great indicators, but I actually came up with some ways to view bias using them. So we're going to talk a little bit about that and how I do that. Then I'm going to do a little bit of a we're going to look at this or that. I have two stocks and they were both requested while I was in the trading room this morning. It is free, by the way. I'll show you how to get to that. And they had one stock, but I was not really happy with it. So we looked elsewhere within the group and found something that was a bit stronger. So I'm going to explain how I did that. And then finally, we will end with the diamond of the week, which actually did come from the free trading room this morning. It's great to go in there. It gives me stock ideas. And when I see something that is doing all of the things I want it to, I have no hesitation using it as the diamond of the week or in my Decision Point diamond reports. So let's go ahead and get started here. First of all, as I said, I do a free trading room Mondays from noon to 1 Eastern time. You can register for free. You do not have to be there live. Once you're registered, you will always get the recordings of the trading room. And you can do that by either registering on our homepage. There's a button there. You can register for the free trading room, or even better, sign up for our free newsletter. And I give you kind of the summary for the week on Fridays as to what we've done, what free material is out there, and just sort of a summary of what we're looking at as far as the market goes. When we look at the Decision Point sector scoreboard, currently we only have two signals that are different from a buy. That would be XLE, which is having a neutral signal right now. That means that the 20-day EMA is below the 50-day EMA. But because that is occurring above the 200-day EMA, rather than going to a sell position, we go into what's called neutral, which means fully in cash or hedged against that particular sector. And then you can see materials also with that neutral signal. We're keeping an eye out because some of these are going to get their buy signals back, or we're going to see some more neutral signals. And this is also in our Decision Point alert every day. So let's go look at some of these charts. I'm actually curious. I haven't been able to see all of them because the indicators are just now up to date and updating. So let's start off with our 5-month candlestick chart, which we do pretty much every week. It gives us all of the insight we need in the short term for what's going on in the market. You can see that we have gone and hit the top of this bearish rising wedge. So if we see a breakout here from this wedge, that would be especially bullish because it would resolve a bearish pattern to the upside. And when you get those resolutions in a bullish manner from a bearish pattern, I always look at that as especially bullish. So we'll be waiting to see what's going to happen there. But for now, price is being held up at the top of that bearish rising wedge. You can see the RSI is currently positive, PMO is on a buy signal, and now we actually do have the OBV making higher highs than previously, which does actually confirm this breakout to new all-time highs. One of my concerns, though, is that we have been seeing this decrease in volume overall as far as total volume goes. And I like to see that increasing when we're getting into a bull market type of move like this with a nice strong rally. It just tells me that, interest is either not there to the degree it was before, or it just tells me that there might be too many people on the sidelines, which tells me there could be some distribution coming ahead. The VIX right now is below its moving average on our inverted scale. When it stays below its EMA like this, that means, of course, the readings are higher. And typically we view that as making the market internally weak. So we are vulnerable to a downside move just because the players inside of the market are still rather nervous. The 1-year daily chart I'm going to show you mainly because what we're looking at is a really nice rising trend channel out of those November lows, and that is still intact. The issue we have is that we have this bearish rising wedge. You saw that on the other chart. Looks like we need to adjust this a little bit, but we have that rising wedge nestled right in between this intermediate term rising trend channel. So we've failed a bunch of times now to get to the top of that rising trend channel, and that always makes me a little bit concerned. I'm looking for those things that will prevent me from making money in the market. And so obviously we're always looking for those bearish setups, because that's the way we can protect ourselves when we're in the midst of a rally. So a lot of times we come across as being very bearish. I always say we play devil's advocate, because when you're in a bull market run, you need to know when things are starting to get a little out of whack. And that's what we do for you. Let's go ahead and look at our short-term climax chart. I'm very curious if we had any climactic activity today, which we did not. What we look for when we judge whether we have a climax or not is whether the net AD comes out of these, we get outside readings from this normal range we have between minus 300 and plus 300. And, you know, we had that on Friday, but we really didn't get any confirmation from, we did get some nice pop on new highs, but we didn't get confirmation as far as our net AD volume was concerned and our volume ratios, which also help us with determining whether we're having a climactic move. And so I'm just going to show you those volume ratios. So on Friday, you know, we had a little bit, this is from Friday actually. So you can see there really wasn't any information here that was confirming our suspicions of a climax for the day. We can see that also we did not get those outside readings on the S&P volume ratios either. So it turned out to not be much of an exhaustion climax. It did have the earmarks a little bit of one. So I did point that out with Carl in the weekly wrap. Let's go ahead and look at our Swenlin trading oscillators. Oh, big move on the Swenlin trading oscillators today. Like I said, some of these are new to me. I haven't seen all of the updates. You can see these two haven't quite updated yet. But the Swenlin trading oscillators, we had a very negative divergence on these with those new all-time highs. Of course, now we're going to move this vertical line that measures what we have as far as the all-time highs or the important tops. So we're going to move that over, and now you're going to see that we don't really have that negative divergence set up right now because these STOs have now really popped a lot higher. The problem I have as I look at this chart for the first time today with the new readings is that we do have overbought readings right now on both of these. You can see typically the normal highs right in here, that 220 range, over here in that 300 range. We're getting there. It's not completely overbought. We've seen higher readings before, so I'm not going to get completely nervous about this, but it does tell me that there could be some problems going on with overbought conditions. We'll look at the golden and silver cross indexes, and I'm going to get back to these a little bit later, and we're talking about our bias assessment. So at this point, I'm going to add the Zoom thumbnail here just so I can see exactly what was going on. There we go. So you can see the silver cross index has begun to rise again, which is very good news. And it's rising out of what I would call near-term oversold territory. So this is a positive for the market. You can see that the golden cross had been in a declining trend. The trend is still declining, but now we are getting a move to the upside, getting a few more stocks that have their 50-day EMA above their 200-day EMA. And yes, I do need to explain this for those who've never been here before. Our Silver Cross Index measures how many stocks within that index or sector, depending on what we're looking at, how many of them have their 20-day EMA above their 50-day EMA. And that gives us a sense of market participation. The Golden Cross Index tells us how many in the S&P have their 50-day EMA above their 200-day EMA, or they're on a golden cross. So we want to see these improvement numbers, but really the overbought conditions that we have here, it's going to be a while really until we see a serious breakdown of the Golden Cross Index, because using just the S&P as an example, when we came out of that bear market low and we got that crossover of that golden cross of the 50 and 200, you can see that very soon the 50 started really putting a lot of distance between it and the 200-day EMA. This is a similar look to many of the stocks right now in the S&P. So you can tell it's going to take a lot to bring that 50-day EMA down to the 200-day EMA for it to lose its golden cross. And that's really what you're seeing across the board, is that so many of those stocks in the S&P had such a great run out of that bear market low that that's where we're at. We've got a lot of space between the 50 and 200-day EMAs on all of those stocks that are within that index. Let's look at the intermediate term indicators, the ITBM and ITVM. We do have the updated numbers right now for that, so that's good. We're still waiting to see how many PMO crossover buy signals are going on, because last Friday, we didn't even have half of the index on PMO buy signals. Now, PMO buy signal obviously is when the PMO is above its signal line. So we have less than half, at least on Friday, that had their price, had their PMOs above the signal line. We need better participation than that if we're going to continue this rally to the upside. You can see that we did get some oversold readings here on the ITVM. It is now starting back up, as well as the ITBM. We're starting to see numbers, the readings climb just a bit. But unlike the STOs, you can see that that negative divergence on both of these is still in play. All right, I will go back to the bias chart, but let's go ahead and start looking at Bitcoin and the other big four items here. All right, Bitcoin had a huge rally today, rallying off of these lows. It amazingly was able to hold that 30,000 level, and it began to make its way back up. We're now seeing that declining trend has been broken, but now overhead resistance is nearby at about 41,000. And so we'll be watching that level very closely. We got the close twice now above the 50-day EMA. The PMO is now looking very strong, and RSI is positive and not overbought yet. My sense is that we are going to see a bit of consolidation at this overhead resistance level. I'm not really looking for a big move that's going to bring us all the way back up to that 60,000, 50,000 level for Bitcoin. I obviously could be wrong, but I won't feel like that's going to happen unless we see some quick move outside of this trading range. Right now, we're near the top of it. Normally, we would expect at that point for it to turn back down, but I do like this move out of that declining trend. It does suggest that we might actually get that breakout to the upside on Bitcoin. Dollar. So the dollar has been moving. It has managed to form a rising wedge. I'll have to go in here and double check it before I write my report, the DP alert tonight, just to make sure based on these rising bottoms, if we include this bottom, like where are we really? Is it still going to be a rising wedge? I suspect it is. PMO is turning over on the dollar, and while the RSI is positive, it is in decline. At this point, UUP is sitting above that 20-day EMA, so I'm not really ready to call a big decline for the dollar, but we are starting to see a few problems beneath the surface. And just a quick look at that 1-year chart. Like I said, you can see that rising wedge, and those are bearish. We should expect a breakdown, but right now we're still above that 20-day EMA. And, you know, we do have that PMO crossover on tap right now. If we don't see a big enough thrust upward on UUP, we will get that sell signal in overbought territory. Now that should spell good news for gold. So let's look at the gold chart. You can see that the RSI is negative here on gold, and the PMO, while it is above its signal line, it's just looking very disinterested in getting above that 0 line, which is what we want to see. Price is just in this little congested trading range right now, holding on to support right here at these lows, the top back here from June. And then if you go across, it lines up pretty well with this top here back in April. And it's kind of lining up here with that low back there as well. So there's a lot of support here, and so far it is holding up. If the dollar does turn to the downside, as the charts suggest, that would certainly give gold an opportunity to rebound. And the fact that it just really hasn't broken down yet here does leave me definitely more bullish. And I think it's very encouraging right now for gold. When we look at the dollar gold chart, very similar look, shouldn't be any surprise. PMO is topping, but still above the signal line. So we lost that rising trend, but now, as I said, we're holding this area of support, which does line up quite well with a lot of these tops and bottoms. So we'll have to see if it can hold in that range. The fact that it is holding, like I said, above that area of support, I think is positive. And then, of course, like I said, that dollar chart isn't looking so good. So what about gold miners? Well, you know, they haven't been doing much. They're stuck in neutral, if you will, really trying to cling to this support level here at that November low. It's, you know, they're just barely able to do that, which is good news. But we're just not, I'm not seeing the participation yet to get me too excited about gold miners. We do have the PMO, it's trying to give us a crossover buy signal, but it hasn't been successful. As of today, we are seeing, it looks like that silver cross is getting a little bit higher. Let's go ahead and add a thumbnail. There we go. So the PMO has turned up slightly. So that is certainly good news. And we do have rising bottoms here on that OBV with somewhat rising bottoms going on here on gold miners. So that's a positive. What's not positive at this point is we don't have the numbers except from Friday. So we may see some improvement in participation, but in general, participation is still rather weak. I would like to see a little bit more of a bounce out of these oversold conditions. I really thought we were on the way right here, and then gold fell out of favor again. And of course, gold miners got caught in that storm. So I still think that they're going to be a really interesting place to invest in. But right now, it's just, we're not seeing that participation that we need under the surface. USO, I was asked about this one in the not the diamond mine, in the free trading room this morning. And, you know, when you look at the oil chart, certainly we're making some great strides, had a really nice, we've now had a 1-week rally here. Price is now holding above the 20-day EMA. PMO is starting to turn up, which is good. And we are seeing the RSI just above net neutral 50. So I would expect to see price come up and retest these highs back here from late June, early July. I just am not really thrilled with the way this does seem to be rounding off, though, already before we get there. But the PMO is telling me it's going to be okay, that we should see those highs again. All right, let's go ahead and move on into TLT. There we go. TLT has been on a nice rising trend. Not much to complain about. It's holding above the 20-day EMA. The issue right now are yields. And while they are in a declining trend, that's obviously what's keeping TLT from breaking out. Is really, of course, tied to what the yields are. And as you can see, the 20-year yield is beginning to rise. And of course, that's putting pressure on TLT. It's still holding that rising trend though. And I want to show you the yield chart. Where's our yield array? There it is. So as you can see, these declining trends are still intact, just like the rising trend is still intact on TLT. So that tells me that, we still have some possibilities going on here for TLT, but we are starting to see a rebound. And let's really zero in and look at the 10-year Treasury yield to get even more perspective. So as you can see, there's that declining trend. It's still intact at this point. We did get the bounce off of this area of support. This zone, I've been watching the 1.2% through 1.3 zone for support. It seems to be holding all of that, but it's really not been able to get up above these key moving averages, particularly the 200-day EMA. And like I said, now we had them fall slightly today. The 10-year yield did fall slightly. So that declining trend is still completely intact, and we could see lower yields coming. But it does look like this could be a really good support area for the 10-year yield to bounce and start doing well. And the PMO has turned up. So we'll be keeping an eye on it. But for now, with that declining trend in the yields and in the 10-year yield, as we can see, I would expect to see bonds still continue higher. All right, let's go and talk about bias assessment. And hopefully some of these numbers will have updated. Let me give it one more shot here. All right, we don't have them completely updated, but I think you're going to get the gist of what I'm talking about here. And then we'll get into my diamond of the week and the this or that. So what we look at is that silver cross. And again, let me take this off. And that is the percent, excuse me, the percent of stocks that are above their 20 and 50-day, have their 20 above their 50-day. And we are starting to see that scoop up, which I told you I really, that I really like. So yeah, we're seeing that move on the SCI, moving upward. But how do we assess bias in the short and intermediate term? Well, like I said, when I was doing my analysis every day on the DP alert, it occurred to me that I kept making comparisons between the value of how many stocks had price above their 20 to that SCI, as well as how many had their price above the 50 in relation to the SCI. When a stock is below its 20-day EMA, that means the 20-day EMA is going to start tending lower toward price. If it goes below the 50, that means that now it is vulnerable to losing its silver cross. The 20 is now vulnerable to cross below the 50. So what I do is I look at the percentage on the SCI, in this case about 58%, and I compare it to these numbers. So since we have more stocks above their 20-day EMA than we have on the silver cross, with stocks having a 20 above their 50-day, that tells me that in the short term, we do actually have a bullish bias going on. I suspect it's going to be stronger after today, given the positive close. And then we look back here and we can see it's almost the same amount with price above their 50-day EMA. So I would say in the intermediate term, as far as bias, we're looking at a mostly neutral intermediate term bias. Really could go either way. I hate neutrals because it means it could go either way. It's not as helpful. But if we start to see this number grow and be higher than what we're seeing here, and this number continuing to get higher than what we see on the silver cross, then, you know, bang, boom, that's going to tell us we have a great bullish bias and we should expect higher prices for a little bit longer. I was truly thinking we were going to have a dead cat bounce here. Clearly that did not occur, and we are starting to see participation begin to expand here. All right, this or that. So I was asked about Micron in the trading room, which is a semiconductor. And we can see that Micron is starting to make a rally here. It hasn't gotten above its 20. We're seeing some improvement here as far as the PMO goes, rising bottoms on the OBV. But you can see overall, Micron really underperforms its industry group. This is the stock compared to its industry group. And the industry group has been, you know, out of favor here for a while. It's starting to improve. Looks like semiconductors didn't have the best day. But the main thing is you're looking at Micron with relative strength that's starting to fade. Now, somebody had asked about NVIDIA. Now look at the difference on this chart. So first of all, you have a stock that's staying above its 50-day EMA. It's gotten above its 20-day EMA. It closed above its 20-day EMA. Now, the PMO certainly doesn't look great here, but notice the difference in relative strength. Look at from April on, you have a really nice relative strength rising trend here. And you can see even against its group, it tends to outperform. So I'm just going to peek over here again so you can see a lot different as far as relative strength. I think you can see that difference. So that's one of those this or that's. All right, I'm coming down to the last 2 minutes of the show. Boom, it really moved fast today. Let's go ahead and look at my diamond of the week, which is going to be Zoom. And I'm going to bring out my 5-minute candlestick chart. So when this one was requested, I think it was only up about 2.5%. I don't think it was all the way up to where it is now. But, you know, the question is it too late? You know, are we catching something early? I would say that we're catching something early here. I really like Zoom's chart right now. There are a lot of good things going on. We'll just start at the top. First thing, RSI is now getting positive. So price is getting back into the upper range, the upper part of its price range for the past 2 weeks. You can see the PMO is turning back up. You've got rising bottoms in the very short term on the OBV, improvement in scooter, and then notice how the group has been kind of, you know, acting about the same against the S&P, but now we're starting to see a little bit of outperformance coming with Zoom. I really like this setup on this chart. And then lastly, we do have a bull flag right here, flagpole and flag. And if we get the fulfillment, if we get this breakout to continue, we could expect to move somewhere in the 500 range here for Zoom. So that would be a really nice upside move. How do you enter? You look at your 5-minute candlestick. Watch it this in the morning, because right now we have the PMO pointed downward. If we start to see that PMO turn up in oversold territory, that is going to be a great buy point for you. So look for a PMO crossover and a positive RSI. Happy trading. That's it for us.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.